What is up, guys? We are back with another video here. We're coming back with an all-time high portfolio review. I did hit all-time highs multiple times this week, 3 times to be exact. We'll go ahead and show you guys that along with my daily returns from today, what I'm expecting going forward, along with all of my stocks, all of my holdings, what I'm up on them, how much I own, etc. Let's go ahead and get into it. But before I do get into it, make sure you guys do like, subscribe, comment down below what video you guys want to see next. And if you guys are new to this channel, make sure you guys do click the link down below and join our free Discord. But let's go ahead and get right into this. We can see that my account is currently sitting at $42,727, up around $1,100 today, or around 2.5% of my account. This is a very good day for me. Especially this morning when I was up $2,500, around 6% of my account, and then we ended up getting a little bit of a sell-off on maybe some news that was coming up this weekend with tariffs. But going and looking at the week, that does put me up 2.61%, and I was down around 6.85%, down around $3,000 to start the week, as we have seen that Mondays have been a little bit of a rough period for us recently, and investors in general. Most of the market has sold off quite a heavy amount the last few Mondays. Rebounding from that was really important on Tuesday, hitting an all-time high. And then Wednesday, we kind of stayed flat. And then Thursday and Friday, we also hit all-time highs. So that is very nice. We actually hit an all-time high, breaking $44,000 for the first time, which was a very nice, little milestone for me. But switching over to the year-to-date, this is where we kind of shine. We were up around 25% year-to-date earlier today, but, that dropped down a little bit, and that is no big deal. We are currently up around $6,500 year to date, or around 17.78% of my account. I do want to compare this to the S&P real quick. So we are up around 18% year to date and around 2.56% this week. I just like to compare myself to the market because that is what you should do as an investor. Your only goal should be beating the market, not beating yourself, not beating others, and not just trying to go for 10 billion% returns and make $10,000 off of pennies. But looking at the week from SPY, it was down around 1%. So we beat the S&P this week by around 3.5%. And then year to date, we are currently outpacing the S&P by around 16%. So that is a very bullish sentiment for me. I own 1 share of SPY. I just use it so that I can do stuff like this where I compare myself to the market and see how my account's really doing. But getting into my first and main holding here, we have Tesla. And currently Tesla's actually been on quite a large dip. We're down around 9% the past week, and then we're down around 18% from highs earlier this month. And my average price on Tesla is going to be set $376 for around 25 shares. I'm down around $350 or around 4% on Tesla, but I'm not stressing this at all. I actually kind of want the price to go down so I can lower my average cost. I ended up bringing it up, which was kind of a interesting decision from my point of view looking back. I think I may have bought a little bit of a hefty time, but I was expecting some continuation after all-time highs, and we really didn't get that. I was expecting a bit more of a bullish quarter 4 of 2024, but we didn't get that. The guidance was really great, so that gives me more conviction to keep buying, especially on these dips. So I am still very bullish long-term on Tesla, but for now, we're down around $400. And then next, we're going to look at Nvidia. I started a position in Nvidia earlier this week, and we're already up around 8.5% or around $300. My average price was around $119. I just couldn't pass up those shares that cheap on something like Nvidia. This is a stock that could be at $150 again next week, have earnings, and then be up at $170 by the end of February, and I'm already up almost 100%. That would be that's kind of a telltale story of Nvidia. I'd be surprised if that doesn't happen. I know it's kind of a niche thought, but Nvidia does that kind of thing. So you can see I do have 30 shares at an average price of $119 for around $4,000 in equity, and I am up around $300 on that position. But now is where things start to kind of heat up. These are kind of some of my more small cap positions, but they are actually some of my bigger returns. So you can see here, we're going to start this off with Hood. Robinhood's market, you can see that they are up 44% year to date, and scrolling down to my position, I am up 37.89% with an average price of $40.44. I do own around 125 shares, and I am up around $2,000 on this position. 325 of those dollars coming today, and that brings my total market value to around $7,000 on Hood. I still really do like Hood. I think that they continue higher. They have earnings next Wednesday, and the projections are pretty high, so I am pretty interested in how this earnings will go. I think if we can beat here, that is insanely bullish, and we do rocket to something like maybe 70 or 80 by next earnings. But switching to our next stock here, we're going to have another huge gainer in my account. This is actually the biggest gain that I have in my account, and it's funny enough that this was probably the least bullish I was on a holding that I've had in quite some time, and it ended up working out, and I made an insane return. And that is going to continue for the rest of the year, in my opinion. We have Oklo here up 160% year to date. 160% year to date. That is crazy, guys. You can see that I have around $5,500 of market value, and we're up almost $3,000 on this position for 103%. That is an insane return. I'm insanely happy with this return. I only own 100 shares. Had I known, obviously, I would have been buying way more. I did have some more money at that time. I wish I would have put more in there, but here we are, up 105%, nothing to be mad about. And we've almost made $3,000 in this stock with no earnings, no news. Nothing has come out about this stock, which actually is a bullish signal for me with this cushion that I have, because I do believe in this company long term. So even if something bearish comes out and we do get a large dip, I'm more than happy to buy that dip, because I expect when we do get some bullish news with the crowd that this stock has behind it, I expect this stock to absolutely rip. I still have a price target of around $70 year in, but with the way this stock is moving, I'm targeting something more like the mid to high 90s, maybe even seeing $100 by the year end. So I am very bullish on Oklo long term. Next, we're going to have HIMS here. Everyone should know HIMS. HIMS actually had a record day, being up at all-time highs once again, where I was. We're up at $46, which was an insane 13.66% just within about an hour of market open. But we did sell off a little bit. Now we're only up around 4.67%, which is still bullish nonetheless. I'm up around $400 today, and then $3,500 altogether for around 70% return. I do own around $8,500 in HIMS, and my average price is $25.32. I own 200 shares in this account, and then I also own 50 shares in a Webull account where my average price is $19.52, and I am up around 120% on that right now, as we are sitting at $42. So more than double my money over there. So I am very happy with that return as well. And then switching into my last stock here before we do quickly hit on my retirement in crypto, I do have Oscar Health. I bought the dip heavy on Oscar Health this week, where I do have now 550 shares of Oscar Health for around 20% of my portfolio diversity. And I have an average price of around $14.93. I'm currently down around 1.89% on this holding, but I have a strong conviction within this stock. I've reviewed it multiple times, so if you guys are wondering why I have so much equity in this stock and why I believe in it so much, make sure you guys do search around my channel. I have multiple videos up on Oscar Health, all predicting summer targets, fall targets, year-end targets, 2026 targets, and so on. But you guys can see we are down around 2%. I expect that to come back. Earlier today, we were up around 1.22%. I was actually positive on this position as a total at one point today, so that can come very quickly. You got to understand, every time this stock goes up 1 cent, I make $5.50. Every time the stock goes down, I make $5 or lose $5.50. So it is a very volatile position for me. I have no problem watching this stock. Maybe at 10 a.m. I'm up 500. Maybe at noon I'm break even, and then maybe at after hours I'm down 250. I understand how these swings work, and I totally am okay with this, because I understand what the stock is going to do long term. I understand that I'm not losing any of this money. I haven't lost that 150 that it says I am down. But I do expect that stock to continue higher in the long term. I expect that $50 price target by the end of the year, which I've talked about multiple times. But going on here, let's go ahead and quickly hit on my crypto. I own $10 in crypto. I sold it all to go ahead and buy some Oscar. I'm totally fine with that. Once again, I understand Bitcoin is very bullish. I believe in Bitcoin, and I think that they do continue higher. But I am just more bullish on Oscar long term, and I think them as a company will really benefit my portfolio just a little bit more personally. But really quickly before the video ends, let's go ahead and talk about our Roth IRA. I do have around $3,200 in the Roth IRA. We were down around 1.8% in my account. This is my other market tracking account where I just have QQQ and VU. It's very simple, around 3 shares of both. I'm up around $100 on both, 115 on QQQ, and then let's see, 82 on VU. So I'm actually up quite a bit more on QQQ, but nonetheless, we are still up around 2.69% this year. So you can see how my main portfolio is outperforming this portfolio, because this portfolio kind of has a longer time horizon. I'm okay with the more risk in my bigger portfolio because I am looking to grow that equity. And then in this Roth IRA, I really don't care right now. I just want that time in the market and just slowly dollar cost average in. And that is why this portfolio is so much less, but safer, because in the long run, I expect this to continue to grow as maybe I do continue forward in my career and can add more money to this account. But guys, that is going to be it from me. That was my portfolio update where we did hit all-time highs this year, and we are up around 18% year to date. So that is an insane return right now. Make sure you guys do like, subscribe, comment down below what video you guys want to see next. And then somewhere around my head right now, there should be a subscribe button and then a playlist and video button. Make sure you guys do check out both of those, and I will see you guys in the next video.